Talk Real Estate with Sharon McNamara, sponsored by Boston Connect Real Estate Services.
Hi, I'm Sharon McNamara, and you are listening to Talk Real Estate Roundtable. Let me share a little bit about my background before we get started. I am the broker-owner of Boston Connect Real Estate, a boutique real estate firm that is home to over 30 real estate sales and marketing consultants who service home buyers and home sellers throughout Boston, the South Shore, the South Coast, and Cape Cod. Our firm takes pride in assisting our clients in the next chapter of their lives by taking a holistic approach to their real estate endeavors. We believe that every move should be a moving experience. Every week, my real estate team member, Mary Baker, and I, along with the director of Boston Connect Real Estate, Melissa Wallace, provide you with our unique marketing approach to selling homes and share with you our expertise in navigating the home buying process. We like to mix it up sometimes, so not only will you hear our perspective on real estate topics, but you will hear the expert thoughts and opinions of some of our real estate agents at Boston Connect Real Estate and the preferred professionals that we trust. Be part of our roundtable. If you have any questions during the show, please call 781-837-4900. We'd love to talk real estate. Follow us on Facebook, Instagram, and wherever you listen to podcasts at Talk Real Estate Roundtable. If you would like a one-on-one consultation with me and my team or one of the dedicated agents at Boston Connect Real Estate to discuss your real estate needs, you can connect with us at bostonconnect.com or 781-826-8000. Now, sit back, relax, take good notes, and let's talk real estate. And hello to all my South Shore neighbors and family. This is Sharon McNamara, and you are, of course, listening to Talk Real Estate Roundtable. I am here live this morning at our studio in Pembroke Center at Boston Connect Real Estate, and we have a lot of busyness going on here. Agents coming in and out, getting ready for open houses and having client meetings, all kinds of good stuff. Today I have a special guest in the house with me. I don't have my team members with me, but I definitely want to give them a big hello. Melissa Wallace is out doing a walk today. I believe it's for pancreatic cancer. So she is in Boston. She is doing that walk. And Mary Baker is actually on vacation right now. So she hasn't taken one of those in, I don't know, a very, very long time. So she's in Colorado. She went to a concert and she went to some other things, so she's having a great time. And then Evis Mason is our newest team member, and she has been working with a lot of our buyers, and she's been busy because Mary's away. So,
that's good.
Yeah.
Busy's good.
Yeah, busy is good. So, and again, my name is Sharon McNamara, and you're listening to Talk Real Estate Roundtable. And I am so happy to have with us, first time that he's been with us. I mean, we've known each other for years, and we've had wonderful conversations. You are very, very good at what you do.
Thank you.
So I'm very happy to have you here. So I have John Harrington with me. He is from Embrace Home Loans. And I know before we start our conversation, John just has to give a little disclosure of something to do with your license.
Yes, I do.
All right. So we're just going to take a minute to let John do that.
Okay. I'm John Harrington, sales manager for Embrace Home Loans. My license number is 756-150, and their license number for Embrace is 2184. And I think that pretty much takes care of it.
And that takes care of everything. We want to make sure we're legal here.
The old CYA, you know.
Yeah, we want to make sure we're doing things the right way. I am not paying him to be here, and he's not paying me to be here. So there you go, right? That's all they really care about?
It's just a nice morning and a nice conversation. If I mention something about programs and things, they want to make sure.
Yeah, absolutely.
People know where to find me.
Absolutely. So, John, why don't you, like I said, I've known you for years. You have some of the best Popeye gifts of anybody I know. So, you brought me a gift.
Yeah, I didn't even know that.
Yeah, that's good. I'll have to open that. But why don't you tell everybody, listeners, a little bit about you, how long you've been in the industry, and, you know, what you love about it, and not so much what you hate about it.
Don't hate any of it.
Okay, good.
Anyway, officially. So actually, I'm celebrating my 25th year.
Wow.
So
great.
that is excellent.
Yeah.
You know, it's exciting.
Congratulations.
Yeah.
No.
There's a lot that's happened, and you know.
Oh, yeah.
You know, you've been doing this a little bit.
Well, which is interesting, too, because I think it puts you in a really good place. Now, I've been doing it 21 years, and knowing what past markets have done and being through them and being able to say, yeah, I've never seen anything quite like this, you know, so I think that that's great. So continue on.
We're saying it with this market, too.
Yeah.
You know, so
absolutely.
It continues on with different things. Every day is different. You come up with something different every day, which keeps it exciting.
Yep.
there's a lot of knowledge there throughout the years. It's your 21 years and my 25 years. Even with that, though, there's still always something that kind of pops up that, okay, now I can put that in my tool belt because now I know what to do when that happens.
Yep.
And that's the reason we're here. You know, you do your thing, we do our thing, is to really professionally help people through this process. And there's a lot to it.
Yeah.
You know, I don't know, sometimes people understand that, but sometimes people don't understand that.
Exactly.
You know.
And that's one of the things, too, is, you know, I was saying about Mary Baker, she's usually with, you know, our buyer clients a lot. And, yeah, you can feel free to just do that and adjust and do what you need to do there. So with our buyer clients, and I'm a very strong listing agent, but it's really important to know who everybody, like when we're getting offers on our properties, I always feel very comfortable when I see your name come across one of them, right? So I always know, hey, well, I know that this job will get done, and that's what I have to portray off to my clients, right? Yeah,
and I think there's a lot of strength in using somebody local, definitely somebody with a lot of experience, and the company's local as well. So there's a lot of strengths in that. And thank you very much.
Where is your office?
My office is in Plymouth.
Okay.
The company's main office is in Newport.
Oh, okay.
Rhode Island.
Oh, all right. That's where my daughter is, actually.
Oh, yeah. Yeah, nice place too. Yeah. We talk about Plymouth and Newport as well. It's a really nice spot. But yeah, so everything's local, and we use local appraisals. We use local attorneys.
Yeah.
So the whole process is done locally, which is great to have.
Yep.
And almost, I would think needed or necessary because the communication's a lot easier. What
about like your processors and things like that? Are those all in-house?
Everything's done in-house. So I take care of everything, and they take care of everything from the beginning of the process to the first phone call to the closing table, which I like to attend.
Yeah.
You know, so get to meet people that way, or at least, help them through that. Take really from the beginning to the end. Yeah. Quite literally the whole way through, which is a nice service to have. However, it is easier to have that service with the process as well. To your point, that we handle everything. So I'm really a phone call away from talking to anybody throughout that whole process that needs to be talked to. There are some places out there that just kind of put them in cyberspace somewhere, and then they can't get a hold of anybody for like 4 or 5 days. Yeah. Now, when you're putting somebody in a loan program, so are you sort of shopping out different programs with different banks and things like that, or is it all through your is Embrace actually the one giving the money? Embrace is the one that's giving the money at the table, unless it's a jumbo loan. Okay. That's the only other. And actually, we have our own, but there's some that go outside of the company. Okay. But everything else is in the company, yeah. So it's literally that's great from the beginning to the end, and we put the money on the table. Yeah, that's perfect. I mean, because a lot of times at least I know when you're getting a pre-approval from you and from Embrace that, okay, you've done your due diligence for this person to have that. And one of the things that I've been seeing a little bit happening is people are just having these pre-approvals, and then halfway through a transaction, they're changing loans. Well, first of all, you can't do that. Because I know there's been a couple times where it's like, oh, the appraiser called on that property, and we've already had the appraisal there. Like, why is this happening? So somebody's out in the midstream trying to change parties, but you can't do that. I mean, the seller accepted your offer based on who you're getting your loan with. Yeah, that is a very difficult process. I've picked up loans in that process, unfortunately, because the other place couldn't do it. Yeah. Which is a different scenario. You really have no choice but to do that. But just to kind of switch just because, that's very difficult and they think nobody's going to know. I mean, what do you mean? I'm going to know. Yeah, I would think, I think we all should know, and that's part of the communication that I'm talking about. Yeah. That kind of goes between all the agents and anybody else that's involved with that. Really, the better the communication, the better the process is going to go. Perfect. So again, you are listening to Talk Real Estate Roundtable. I am here today with John Harrington from Embrace Home Loans. If you have any questions for myself or for John this morning, feel free to call. Tim can get you through at WATD. Oh, I forgot to say hello to my Tim. Hey, Tim.
Hey. It's all right. I know you got a lot going on over there. Okay.
I call you my Tim.
I don't know. You have to talk to Joel about that.
I know. I'll have to share.
It's all right. I can share. It's all right. Yeah.
Okay. Perfect. I have yet to meet your Joel, by the way. So.
I know. There's a lot of people, but
yeah. One day.
Yes.
But if people want to have questions, you want to give them the phone number for us, Tim?
Sure. 781-837-4900.
Again, that was Tim. He's at WATD Studio. So if you have any questions for me regarding real estate or any questions regarding home loans for John Harrington from Embrace, I'm going to keep on saying that over and over so everybody knows. You can call in and we will get your questions asked. You can also go on Facebook. We're on Facebook Live right now. So you can see me. Sharon Costa McNamara, or you can go to any of our Connect pages. Melissa isn't here, so I'm hoping I did it the right way. I'm hoping everyone can hear me, but you can go at all those pages and you can actually write us some questions going through here. And I can see that my cousin Kathy just tuned in as well, and we are taking care of her daughter. I think her daughter is out looking at some properties this morning with one of my team members. So good morning, Kathy. So what are some of the topics that you want to talk about? What do you think? Can I just ask? I'm just going to get it over with.
Yeah, I probably might as well.
Let's just get it behind us, all right?
So, yeah.
The number one question that you're probably being asked right now is, what's going on with the rates? Are the rates going to continue to go higher? Why are the rates going higher? So why don't you give everyone a little education on it?
Sure, I'd be happy to. Well, all right. The rates kind of follow like any other market. So it's a bond market. There's mortgage 30-year bond markets that are out there and available. And what's happened throughout the last couple of years where the rates have been what we call lower, the government has actually been buying a lot of those on a monthly basis, like a lot of them, to kind of drive those rates down. What they've done is kind of stop doing that as of really this month.
Yeah.
So we're going to see, we've seen adjustments for that, number one. So we've been planning for that.
Yep.
So when somebody mentions something nowadays, the markets react to it when it's mentioned, not when it's really activated.
Yeah.
So once they hear something may happen, the market's reacting to it. Like, it's like the stock market, anything else.
Exactly.
If they hear something out there, they're like, oh boy, that could happen. So let's react to that now.
Like Twitter stock.
Yeah. Yeah, okay.
With Elon.
Yes. We'll see how all that goes.
Yeah.
However, we started seeing that reaction back in November, December, when they really kind of said they were really going to do that much later.
Yeah.
I think they were going to do that next year. But when they said they were going to accelerate it, that's when the market started reacting as far as the rates go.
Yeah.
So that really started happening with us in December, and then more in January, then February, then March, and still April.
Yeah.
It's kind of been kind of a climb.
Yeah. And it's interesting, too, because I feel, and I'm guessing, I know a lot of the agents that you work with, we were talking about, one of my favorite people you work with very closely is Amy Troop. I love and adore her. She's at another company, but we're all colleagues. We just wear a different color logo. So I adore her. So I know, she's not salesy. The people that you're working with, I just don't feel like we're a group of salesy type real estate agents. So when we were saying to people, you know what, they're predicting that these rates are going to go up, you're probably better to do something sooner than later. It still sounded salesy.
Yes and no. Our job as professionals is really to kind of let people know what's happening in the market, and we in the market know what's happening.
Yeah.
So it's really kind of it's really good. It was good advice. It's still good advice, I think. Depending on what happens down the road, with some decisions that are being made by the government to affect us in the general markets out there, it could even continue even higher.
Yeah.
We were expecting that maybe at the end of this year we were going to see some of this, but it's been accelerated.
Yeah.
Yeah, we didn't really wake up January 1st and expect what's happening
right now.
First quarter,
So rates went basically, and again, I know that rates are different for different people because of, credit scores and, circumstances personally. Where were you seeing rates in January, then February, March, April, and where are they sort of falling now?
Oh boy, do I really want to mention that?
I know, I think you do.
Okay.
Because I think that the important part of this is that, I know you want to look at me, but I definitely want to hear you more.
Right.
Yeah, but you can. So feel free to move this. But I think that, I think it's important because if you're anticipating that they're going to go up again, maybe people are going to understand that now is the time for you to buy.
Yeah, that's a valid point.
Yeah.
So basically in January we were in the low threes. I'll just put it that way. So the low threes, which is really good interest rates. Right now we're hovering around fives, depending on those things you mentioned. So there is a lot of things that's a lot of criteria that goes into rates. It is the program, number one. what their credit score is, what their down payment is, and what their loan amount is, actually all factor into what the rates are.
Yeah.
So, I mean, I have these conversations quite a bit with my clients because, I'm sitting there talking to them, well, my neighbor got, now I'm hearing, my neighbor got 4% or they got 3.5%. But that was 2 months ago, so 2 months ago, my rates were at 3.5%. So it's not like we're trying to do anything different here or extra charges or anything like that. It's really where the market is on where the rates are. So and I've always looked at the mortgages as being part of the dream.
Yeah.
So the dream is to buy a property.
Yeah.
Give yourself a living for you or your family or your environment you want to be in, the community you want to be in. The mortgage itself is just the ends to be there.
Yeah.
And it's going to give you the funds to get there.
Yeah.
And the rates are just a reflection of what the market's allowing for us to charge for that. So if there's more people in the market, the rates are going to be, more people in the market, the rates are going to go down to make it a little bit more competitive. But if there's less people in the market, like the government's out, now the rates are going to go up to make it more attractive for people to get in the bond market.
Okay.
And that's kind of how it works.
Yeah.
Now, just a little bit on that, just to kind of maybe wrap up a little thing. They're talking about interest rates going up for the Federal Reserve's talking about just raising interest rates. Those are not our interest rates.
Okay.
Those are related to the lending for the government. Actually, sometimes when that happens, our rates can kind of adjust down a little bit.
Okay.
Because it's really not, we react to a lot of different things, but depending on what the news is and depending on what's happening, that may not be a bad thing for us to have the rates go up. So if they go up a half, you might see a little bit of adjustment in the interest rates for the mortgages, believe it or not.
So how is it working for your clients? I know that there's been, quite the discussion for us as listing agents, if we have something under agreement, to make sure, are people locked in, right? Because things could change dramatically, right? And then are you seeing people that are sort of getting bounced out of something they're already under agreement?
Under agreement, no, because what I do is I make sure once I have an offer accepted and signed, I have that discussion with my client right then and there.
Yep.
Because of those reasons. More importantly, I've always done it.
Yeah.
I've always wanted to let the client know what the option is at the moment.
Yep.
They can lock in if they want to. They can wait if they want to, but I let them know right when I know that they can lock in where we're at for that.
Yeah.
It's more important now than it's ever been, but I've always done my business that way.
Yeah.
Just in case, I've had days where I've put the phone down, and next thing you know, 2 hours later, the rates are up 0.5%. Yeah. I'm not saying that's happening now, but there's been days that has happened. Yeah.
And what do you think people's, their objection to locking in? They think that it's going to go down, but can you buy it down?
You can buy a rate down, sure.
Yeah. So.
Yeah. When we actually have rates, it's a whole sheet.
Yeah.
It's up and down. So I'm talking to clients. I'm always talking about ones that's not going to cost them any money.
Yeah. That's good.
But they can buy it down. And I'm probably going to have more of those conversations now that the rates have gone up a little bit than I've had in the past. Because there's, buy it down from, 3.25 to 3.125 doesn't really make a lot of sense, but buying it down from 5.25 maybe to 5 might make a bigger difference.
And I'm sure that you're having a lot of conversations. I mean, we're still in this situation where we have low inventory, multiple offers are out there. So you're probably having the conversation with your clients who, were pre-approved a month ago, they have to get pre-approved, right? So, I mean, I had heard that, people who were maybe looking at 500 are now able to afford 400. Is that dramatic?
Maybe not that dramatic, but there are differences, yeah.
That's a lot.
It is a lot, yeah. It depends on when they get. I mean, if they got pre-approved a while ago, maybe that could be the case.
Well, and that's the thing. It's people are buying. They're thinking about what they can afford based on what their payments are going to be, right?
Correct.
Yeah. So.
Okay. Yeah. Well, if their payments change. So I have a lot of different conversations over the years, but I always have that conversation with the client. If you were buying something at 5 and putting down 10%. Estimating out taxes, this is what your payment should be. At least give you a guide. Are we in the right area for that payment?
Yeah.
But it's always their budget. It's not really mine. If they tell me they want to do 5, but really they could be pre-approved for 6, I let everybody know, hey, you could be here.
Yeah.
But 5, if you're looking at 5, this is what your budget is.
Yeah. And I think that's important. I mean, I don't know that, just because I can afford this amount that you should be spending every penny. You know what I mean? I just feel like there was a while where we saw that, where people were just like, all right, this is my max and I'm going to go right to it. So it doesn't really leave those people much room for situations like this, right?
That's correct, yeah.
All right, perfect. Again, I'm going to give that phone number for WATD, 781-837-4900. I'm sure that everybody is out running around right now doing soccer and different things. I'm sure all the sports are starting up and maybe out doing some errands. But if you have any questions about the market right now, and that would be the real estate market, and if you have any questions about home loans, we have your guy here today, John Harrington from Embrace Home Loans, and he's going to discuss a bunch of different things with us today, like how to stand out with competing offers, and what else do we have? Current rate environment we just discussed, condo financing. So we have
some down payments maybe on how they work.
Perfect.
As long as I've been doing this, I'm still surprised people that they don't need to put 20% down on a mortgage.
Is that so interesting to me that people don't know that? So that's a good place for us to start. Okay. So why don't you talk about that?
Sure. I mean, I just had this conversation the other day with somebody. That it's what, and I asked, what is your plan for a down payment? And the answer was, I have to put 20% down. I'm like, well, no, that's really not in everybody's case anyway.
Yeah.
But the 20% is really the mark of mortgage insurance.
Yeah.
So if you want to not pay mortgage insurance, then you want to put 20% down. Other than that, you will have some sort of a mortgage insurance payment. And mortgage insurance came around because really, before mortgage insurance, you had to put 20% down. But when they came out with mortgage insurance in the early 70s, I think, I don't have it in front of me, but that allowed people to put less than 20% down. And there's still those programs out there available today. Through conventional financing, we can actually do as little as 3% down with Fannie Mae and Freddie Mac, which is great.
Yeah.
And then we have Mass Housings, FHA, which a lot of people hear of, is 3.5% down.
Yep.
And then, believe it or not, the VA, the Veterans Loan, it can do as little as 0 down.
Yep.
Which is a great advantage for them.
So so I know what PMI is, but explain, like, is it a percentage? Like, what is the rate? Like, what indicates, like, how much a month more are people paying if they don't put 20% down?
Okay. It's basically the same criteria as the rates. So it's your credit score, how much you're putting down, and then loan size. So it's the same type of criteria that we have. So there's mortgage insurance companies out there that offer that to us, like regular insurance. We give the criteria of the client, they give us back what the rate they will offer them. But it's the same type of thing as you would for a rate.
And why does the bank want that?
Okay.
I know it's obvious.
Yeah.
So, but
yes,
why?
It's mortgage insurance. So because we're doing less than 20% down, if for some reason that mortgage is not being paid, we're covered for a certain percentage of that mortgage returned back to us. So whatever we lent out, there's a percentage that comes back if the mortgage has been defaulted by the client.
Okay.
And that's what it is, mortgage insurance. But it's mortgage insurance for the lender. It's really not mortgage insurance for the borrower.
For the borrower, exactly.
So that's what it is.
And I know too. I mean, when we're talking about rates and everything, and I think it would probably be another whole show that we could do. Is,
I'm available.
Okay, you're available. We do the show on Tuesday nights as well. So, but that is the other piece is. We're talking about rates based on, like, my credit score is in the 8s, you know what I mean? So there are a lot of people, like, what's the lowest rate you can have in order to get a loan?
What's the lowest rate that we're offering?
No, like the lowest credit score. I'm sorry.
Oh, okay.
My credit score.
And I thought that's where you were going with that,
actually. Sorry.
So actually, I can't speak for everybody out there because there's a lot of different places with different criteria.
Yeah.
Ours is actually, with the government loans, is 580.
Okay.
And with the conventional loans, you can go as low as 620.
Okay.
So there's definitely
580 is pretty low, right?
580 is,
580 is really.
There's a lot of flexibility in those programs. So that's the FHA, VA, and in some areas, the USDA loan.
Yeah. Because one of the things we're hearing too is, and I know I'm jumping around a little bit, John, but that's the way my head goes.
Mine too.
Good, perfect. Then you can keep up with me, and hopefully our listeners can as well. But when you are FHA loans have been, I would say, more difficult for clients to get their offers accepted, especially on homes that aren't 100% perfect, right?
Yeah.
So the appraisal process with the peeling, chipping paint, no railings on the stairs, things like that, it makes it a little more difficult. But maybe like a conversation I'd love to have is like, let's try to improve your credit score. Like, you know what I mean? I think that's a whole show we could do, right? Like ways to improve your credit score so you can get your 580 up to a 620 or something.
Yeah, and actually we have a program that helps with that. It gives us advice on that. It's not anything that I have because credit, the way they do the credit scores are just, there's all sorts of different factors in there. I'm not an expert at it.
Yep.
However, we do have a program that we can run through. I just did it for a young lady the other day.
Yeah.
Challenge score.
Yeah.
And ran it through. But sometimes with that, it's good for maybe a little bit of an adjustment.
Yeah.
Quickly.
Yeah.
Sometimes it's more of a long-term thing. Like in her case, it was 6 months. I said, you do this, and in 6 months, you should have the score over where we can get you qualified.
Yeah. But I think that's
which is a good plan.
Yeah. I think planning, I mean, we're talking about, one of the biggest financial decisions that anybody is going to make. If you don't do it now, you do it in 6 months. If you do it in a year, and that's what, maybe that's my sort of conversation to our listeners right now. If it's you or your family members or whoever, if you're thinking about, I don't think I'm going to buy a house until next year. Well, right now is the time that you should be talking to a loan officer, right?
Yes, I try to encourage people to even to have these conversations. I'm not looking for 6 months or whatever. Now's the time, because if we have to tweak something, now's the time to find out. Not when you're at the doorstep saying, hey, I want to buy this house. John, where's my pre-approval letter?
Yeah.
Sorry, we really have to do some work with your credit score, or maybe this isn't going to work. You don't have enough down payment for the program you need to go to.
Yeah.
So I always encourage people just now take a look. There's no charge for that.
And I think it's great too, because I feel like, we've been having this conversation in the office. Actually, on Tuesdays we do roundtables for all of our agents. And this past week we were talking about a couple things, and we were talking about sort of the demographic that we're seeing. A lot of millennials right now that are sort of the people that we're working with, which would be like Trish and Nick Flynn. They're millennials, right? That they know exactly what they want, and they're just going to go ahead and sort of do it. I don't know what my whole point was with that, but with the credit score, but knowing where you are today is going to help you get to where you want to be later down the road. But paying off like like some people, do I pay off my student loan or do I pay off my credit card? Or let me tell you, like, this is where you are right now. You shouldn't go out and buy the 4-door Jeep Wrangler just because it's summertime.
Right. Yeah. And that's the idea of maybe taking a look ahead of time if they need to pay something off or whatever. It's student loans. People aren't really aware. A lot of them are deferred. However, we still have to put a payment in there, even if they are deferred.
Oh, really? I did not know that.
Yeah, no, there was a day FHA wouldn't, as long as they were deferred more than a year, but they took that away probably like 10 years ago at this point. I think the VA still allows for you to, if they're deferred for a certain amount of time, I think they will allow for you not to put a payment in. However, everybody else, you have to put some sort of a payment in there for, if they're income-based, it's different. Then we can figure out another payment system that way. But for the most part, we have to put some sort of payment in there.
Well, that's good to know, actually. Really good to know. Especially with the way that, I guess it makes sense because people's, mortgage, not mortgage, it's like a mini mortgage, I would guess, for some people out there right now.
Part of that crew.
Okay, so let's see. We were...
down payments.
Down payments, let's talk about that.
We could do really as little, well, if you're a veteran, we could do no money down. But work our way up from there, which I let people know kind of what I'm looking at or what they have. However, the other point I wanted to make with part of the down payment is really now they will allow a gift to be all of that down payment.
Okay.
So if you're 3% down, they'll let you get 3% from a family member. If you're 5% down, whatever it might be, it can be a gift from a family member at this point. There was a time there that they really weren't allowed for that for the most part. Some of the programs, you had to have a certain amount of money in there. And also, we have a program that actually has a down payment assistance program, which it's really a second mortgage, but you don't have to come up with the funds. It actually allows us to go up to like $15,000 towards your down payment.
Okay. All right.
That's through Mass Housing.
Okay.
Just in case you're
Mass
curious.
Housing, yeah, I will write that down. Okay.
Yeah, so that's a down payment through them.
Yeah.
You know, they have different criteria with credit, and maybe it's income-based too.
Okay.
However, it's a good option to have.
Yeah. Well, and that's the thing too, is I just think at, some people with, with the way that they do have, all of these. That's the other thing too, is I'm very surprised at, people's car payments and things like that. You know what I mean? It's just, I don't know why, but that and school loans and all this other stuff, it's hard to sort of save some money. And that's one of my worries. And I had said this last year is, the way that we've been seeing, the offers coming in, multiple offers, people have like sold their first house and now they're able to get the second one and they have a lot of money down, and there were people with cash and parents who were like emptying out like 401k plans to give to their kids so they could be cash and get their house. I felt like there was a clear delineation between the have and the have-nots, which really isn't fair. So I love hearing that there are some programs out there that can help people who maybe just don't have a lot of cash on hand.
Yeah.
Yeah. I mean, I had zero 30 years ago. I mean, actually, when Mark and I first got engaged, we gave a builder $13,000. It was everything we had, and by we, I mean him. And
You mean we?
Yeah, I mean we. And the builder left. We had nothing.
Oh, I was afraid of that when I bought.
Yeah, we had nothing.
I heard about those.
And then we were paying for our own wedding and everything else, and we had all that, and we had to live with our in-laws for a few months. But we rolled pennies and sold suits to consignment shops in order to get our down payment. So I've been there. So that's why when I see people who don't have a lot of money, and that's why it's sort of sad that the FHA loans, they're for a good purpose, but it seems like they're getting pushed aside.
Yeah, and I have maybe a good solution for that.
All right, tell me.
That's going to morph in, I guess, to the next subject. We're going to talk about, I don't think you've heard this from me yet, but we have a new program which actually, for a buyer, now you're saying you like to see my pre-approvals when they come through the door or with the offer. We're taking another step in actually putting the application into underwriting and having them approve it. Get a commitment letter before there's a property under agreement. So when you're going to make an offer with a client, you're offering with a commitment letter. So the financing is actually in place.
Wow.
It's all set.
That's great.
It is great.
And then they can close in how many days from there?
We still need an appraisal. However, once we have that appraisal, everything else should be done in the title work. So it's, I'd say we could do now. The appraisals are a little slower.
Yeah.
So 2 to 3 weeks.
2 to 3 weeks. That's amazing.
Yeah.
I mean, that would probably be too fast for most of the sellers to move, but at least it could be done in 30 days, right?
Well, it's not. Well, that's part of the offer as well. So you can go in and say, hey, I've got this, but it also means that we can close in like 2 or 3 weeks. And as a listing agent, I'm sure you would like to hear that anyway, whether it's the case or not. Still, you got, okay, this is a strong buyer, because if they can close in 2 or 3 weeks, I've got their financing in place.
Yeah, absolutely.
This is a good offer above maybe a pre-approval with, who knows what's going on.
Oh, yeah. Well, there are some, and it's funny too, like sometimes I get pre-approvals and it doesn't even have like a logo on it. I'm like, well,
I can't speak for that.
I know you can't. You can't. I can. I'll tell you what I think about it. I think it's ridiculous that you just gave me something that looked like it was, typed on a typewriter from 1929.
Yeah.
So, but that's the thing too, is I really, we've stressed this over and over again, is having your team in place that's going to help you through this process. Again, it is the biggest financial decision you're going to make.
Yeah.
You want that team member who's going to say, hey, I know you're in good hands when I send you over to John. Like, he's going to make sure that you have everything you need. You're going to be well prepared. Because people seem stressed. Like,
yeah, it's stressful. It's stressful. Even when even when I tell people they're all set, they're still a little stressed. They're going to be until the end, because they probably heard some stories from family members or workers or whatever that, all of a sudden things blew apart the day before.
Yeah.
So it's out there.
Yeah.
Not through me, just for the record. But there are stories out there. And I
heard.
I just saw a property come under, back on the market because the financing fell through. And just last night on Facebook, I'm like, oh boy.
Yeah.
It's terrible for everybody.
And it is, because it's such the investment that's already put into it for the buyer. They've had their home inspection. We're seeing people get back on track with doing home inspections. It was something that Boston Connect agents were always doing anyways. But, gets them on track. I don't know. I just sort of went off track there because I was thinking about something else. I don't even know what I didn't want to forget something, and then there I go. So.
Well, there is an investment involved with that. Yeah, and
the investment. There we go.
And is an appraisal maybe involved with that? I don't know if that went that far, but and I get calls from agents like when they go to finally make an offer, they've been pre-approved through other places, and now that they've got an offer in hand, all of a sudden they can't do the financing, like out of the blue.
Yeah.
It's like, okay, then they throw it to me, and I usually find a way to make it work because I just look at it like, why can't they do this?
Yeah.
I don't see, because I'll have to look like it 10 times just to make sure I'm not missing anything.
Missing something.
I'll knock on glass wood.
Yeah.
That, so far so good. But I've gotten, quite a few people calling, not, I shouldn't say in a panic, but, hey, John, can you help this out? We've already started the process. Now they're telling us they can't do this financing.
And I think that that's important, too, when you are working with, you have your buyer's agent, like here's a good example. I was with a client the other day, and I said, oh, well, do you have your own attorney? She actually works in a law office. So I was like, do you have your own attorney that you're going to be using? Or would you like me to refer you to my attorney? And she's like, whatever you tell me to do, I am doing. And I was like, well, all right, great. And I think it puts everything together. You know what I mean? It's seamless because we're having conversations all the time without even the client even having to know maybe if there's even something that's going on, right?
Yeah, right. Yeah, you guys gain a lot of trust, and I hear that a lot. It's like, what, because conversations with me, they don't know me at all. When we haven't had that first conversation, but they listen, Sharon recommended you. I trust her.
Yeah.
So I'm going with you.
Yep. And I have to tell you,
which is nice,
and I am sort of fortunate too, though, that in the industry, I've been in it for 21 years, and I'd like to think that I have a good reputation in the industry too. Is generally speaking, when I do refer people, they are very well taken care of, because not just because they know that they're working with me and my team or a Boston Connect agent. It's just because we just happen to know who the best of the best are. Right?
Yeah.
So,
you've got to put your heart and soul into this business all the time. It's 24/7, really. For the most part.
I know. I'm going to give that phone number one more time. I'm surprised we haven't gotten any callers, but people are probably very intrigued by our conversation. Again, I have John Harrington with us today, and he is from Embrace Home Loans. And you can call us at the studio, 781-837-4900. Tim is alert and awake and listening diligently for that phone to ring so he can pipe you over to us.
Bright-eyed and bushy-tailed.
Bright-eyed and bushy-tailed. So you can, ask any questions that you might have for John, because he really does have a lot of knowledge and a lot of experience, and he takes really good care of his clients. So we're happy to have him here with us today. We're also on Facebook Live, so hello. If you want to check us out on Facebook Live, you can go to Sharon Costa McNamara, or any of the Connect pages, Marshfield Connect, Pembroke Connect, Situate Connect, all of them are out there. Dorchester Connect even this morning. So, all right, so what are some of the things, I know that is, with competing offers, is that's what you were just talking about, right? Was ways to stand out. What are some of the other things you're doing for that?
And there's another piece to this. So we kind of we're rolling with that. So so once they actually go through that process and we give them the commitment letter, we are actually now adding to that particular program and are going to, or we are actually getting if they're offering on a particular address with a particular offer, I'm sending that now into underwriting, and they can review for the appraised value. And if they can support that appraised value for the offer, they will give another certificate guaranteeing that we will guarantee that we will support that value, whatever that value is that they're offering, if they can support that, or they'll come back with a counter on that. So in other words, if they're offering, looking at a home for $500, seems to be a good number nowadays, and I submit in, it's 3 Center Street, Pembroke, for $500,000. As long as it's a conventional program, can't do it for the government programs. Conventional, and they're doing at least 5% down. We'll submit that offer. We'll submit that into underwriting. They review it like an appraiser would, and say, okay, we have enough information here to support the $500,000 offer. They will give another certificate on top of the commitment letter and saying, okay, we've got financing in place, and now seller or seller's agent, we're going to guarantee, we're going to base everything off of $500,000 appraised value, if that's what they're offering.
Now you're singing a song that I really like.
Yeah, that's great.
It is huge because the part that you sort of missed a little bit is that if the house is on the market for $500, chances are we're going to have offers that are $525, $535, $540, $550, right?
Yeah.
So so let's just say it was a $500 list price. Your client is approved for $550,000. Mm-hmm. You'll give a certificate saying that you're okay with that $550.
$500. So whatever they come back for the value of the property.
But what if they do a value and it does value up to $550?
Oh, that's fine.
Yeah.
Oh, yeah. Yeah, whatever they can support. So it's working well in two ways. So one, if they're supporting the offer itself. So their offer is $500 and they're supporting the $500, really taking the appraisal contingency out of it as well. As well as the financing. So, like to say it's like cash, but it's like cash.
Yeah.
We're already set.
Yeah.
We do have to do an appraisal, but we're going to guarantee that appraised value be at least $500. Now, in your situation, so you're saying that they want to offer $525.
Yeah.
However, we're saying it's $500.
Yeah.
At least you know what that gap is.
Yeah.
So going into it, all right, we're going to guarantee we know that the appraisal is going to be $500. We're offering $525, but my client's willing and can do the $25,000 gap. So it's still taking away the appraisal contingency.
Yeah, which is great. I mean, that's where the concerns are. Yeah. I mean, I think that really is where some of the issues and concerns are, is because when I feel like we've heard recently a lot of appraisals are coming back that they're not appraising. But that's why we have to be very careful with the buyer that's being chosen to make sure that there is there a ratio that your bank uses, or your company, home loans? What would you be considered? A bank?
A lender.
A lender.
Yeah, we're a lender. Yeah, we're not a bank.
So what would you, like, is there, how can I word this? You're going to have to help me, because this is why I have the experts here. So if I had a house that was on the market for $500,000 and somebody offered $550,000, what does the bank want that house, not talking about this program, but what does that bank want that house to appraise at? $550?
Whatever the purchase price is.
The purchase price is $550. Yeah. So they want it to appraise at that. But what if the person is putting $200,000 down? So they're going for a loan amount of $350.
Well, yeah, and that's different. So if the person has, so basically that person, say, I
can get you just as confused as me.
It's in the head. It's just not coming out the mouth properly or quickly. Okay. I guess I should slow it down a little bit. I'm one of those people.
That's what we're talking. I mean, honestly, we're both the same person. It's like in my head, and I need to get it out. All right, go ahead.
So it's offered at $550. It comes in at $500, but the person's putting a lot of money down. It doesn't really affect that person that much, because really, they're putting down so much money, that money gets absorbed in that $50,000 difference.
Okay.
So we're still looking at it as a $500,000 appraised value.
Okay.
But because they already have that $50,000 difference in there somewhere, we're just going to tweak what we're looking at for their loan.
Okay.
And how we're looking at their loan to value. However, that person would be fine with that person still move on. They would just have a different loan.
Okay.
Loan to value.
So is there a certain loan to value number, or like I don't know what the word is that I'm looking for, like a certain amount of, let's forget it, because I can't think about it.
No, I get it. But that wouldn't work for somebody putting 3% down or 5% down, because they're only putting 5% down. Yeah. So that $50,000 gap, we can't, it wouldn't be absorbed in that down payment.
Would you, and again, I'm sorry for all of our listeners, but this is like, I just try to make it real, and I'm dumbing it down for me, not for anybody else listening.
Me too.
If the same scenario are you looking for that person to be able to meet the gap by $50,000 plus an additional something, like up to the $500? Like, you know what I mean? Like, you have to have some type of protection.
Right. So it would be the difference, yeah. So we base everything off the appraised value. So whatever that difference is on the purchase price is really up to. Well, I used to say, if there's a difference between the appraisal and the purchase price, there's three different things you could do. It's one, you can make up the difference. Well, actually, I used to say first, you can negotiate and have the seller kind of drop the price.
Yep.
Of course, I'm dealing with buyers, so.
Yeah.
Or you can negotiate and meet in the middle somewhere.
Yep.
Or you can walk away. It's really kind of what those three differences are. And it's still the same.
Yep.
It's just that now it's a little more, it's different the way the market is. And used to be, if it was a little bit of a difference, you could work that out.
Yeah. And now, and just so our listeners 100% understand that, because I think that that's a really good point, is So what we're explaining right now is if you do purchase a house, it's on the market for $500 and it sells for and you put in an offer for $550, just using round numbers here, by the way, and then it appraises at $500. There was, the three things that John is saying that you can do are, do you want to repeat them?
Sure. You can have the seller reduce the purchase price to $500.
Yep.
That would be, then it's a match with the appraisal. You can negotiate, so you can maybe meet in the middle, or you can do 40-10, 10-40.
So you each come up, let's say half, $25,000.
Yep.
So the seller comes down in price, and then the buyer brings $25 extra to the table.
Correct.
Okay.
Yeah. Or you could walk away. Because you had an offer at $550 and agreed to pay $550. Unfortunately, your financing may or may not get you there. Like I said, that's more tricky. The larger down payments, there's probably a way to make that work. But if you're putting 3 to 5, 10% down, there's really no way to make that up unless they have something that they can come up with.
And that is exactly the reason why I think that we're seeing things as difficult as we are, especially for, first-time home buyers, and they're just getting outbeat because they don't have that extra cash for that differential. When things are selling, emotional value is what I call it. Right. I mean, the house is on the market for $500 because that's the market value. It's selling for $50,000 because that's the emotional value. Right. But the banks don't really care what your emotions are. They want to make sure that they're protected when they give you the money.
Right. Well, I have to say, this program that I mentioned, it's been working. So
That's
I've
awesome.
had quite a few people now that have had offers accepted because of the program.
Okay.
And the realtors gave the feedback. They said, this is a great program. One of them made the first offer. They didn't take any more offers because they took that offer right away. I mean, they did offer a little more than asking price, but they took it because they knew the financing was in place.
Because it was secure. And that's, honestly, as a strong listing agent, that's the way I always tell my clients to go, just, make sure, if it's secure, what more do you want? You want to make sure that you didn't already have everything in the truck and they just, they can't do it.
Right.
Right.
Well, I walk around with a lot of cash in my pocket just for these reasons.
Yeah. I was going to ask you something else, too, about that, just making sure. So if somebody wants to do that program, what is your suggestion to them? Like how long does it process take for them to go through that underwriting process to get that commitment letter?
Very good question. Thank you.
Thank you.
So when I was going through that process, it's really the same process as if they had a property under agreement. So we start that application. They send me the information that I need, the documents, typical, if you want to go through the list, photo ID, pay stub, W-2s, and bank statements. It's really, in general, that's what we need. Unless they're self-employed, then it's a different criteria. But to start things, that's in general, that's what we need to start. Which
Can you
is
say
really
them
a big
again?
list.
So
Sure.
photo ID.
Photo ID, current pay stub.
Okay.
2 years worth of W-2s, sometimes one, but I'll say 2 years worth of W-2s, and then 2 months worth of complete bank statements or 401k statements, whatever they're using for funds.
Okay.
Which I want to talk a little bit about the 401k. You can use that for a down payment as well.
Okay.
And some people don't realize that they actually, in most cases, I believe, if you withdraw the funds out, they're not charging you for the taxes because you are using it for purchasing a home.
Okay.
And or you can do a loan against your 401k and use that as a down payment, which I think a lot more people are starting to do that.
And I think, too, and this is, again, I'll go back to, you should be calling John sooner than later, because if you want to do those things, we've had this happen a lot of times is, okay, well, especially when people are waiving home inspections right now, too, right? So it's like, all right, well, we used to be 10 days until we got from offer to purchase and sales. Then it was 7 days from offer to purchase and sales. Now we're seeing 3 and 5 days offer to purchase and sales agreement. Yeah. A lot of people, I'm surprised that a lot of people are surprised that they actually have to come with a check for that second deposit amount. Right. So transferring money out of 401k takes a bit.
Yes. Yeah, I just had that conversation with somebody because they're actually, and it happens when people are selling current properties and buying a new one. They've got a good amount of equity going in for the down payment, but that's at the end.
Yeah.
So their contract deposits really more or less you guys than us. We don't really, it could be $1 for all we care, but we understand that it's there. But coming up with those funds in the meantime is a little bit. So I've had people doing that for that reason, taking out of the 401k, short-term loan, and then paying it back once the house is sold, transferred over, and all that.
That is a very good point too. And again, I'm just slowing it down too because I love the things that you're saying. I just like repeating them to our listeners. Is when you are selling a house and buying a house at the same exact time, if you have a lot of equity in your home and you're going to be walking away from the home that you're selling with, $300,000 check, that money, yes, will go towards your new home. But while you're in the process of, offer to purchase and sales agreement, you have to have money down. So usually we like to see 5% down. But what I've been seeing though is, in order to sort of impress the seller and say, you know what, I want you to know like how much I want this house, I'm going to be putting $100,000 down with the purchase and sales agreement because they're risking that money.
Yeah, you can put down whatever It doesn't matter to us. I think people ask me, I'm like, it's really up to the agent and how you negotiate that in.
It's really up to the seller.
Well, right? The seller's agent. Yeah, you guys handle. Like I said, I don't handle that, so I really don't. It's not a conversation I have. I just let them talk to you about how that's handled, but let them know that there's going to be some funds that you're going to need to secure the contracts for this, and you get that back.
And I have to tell you, I love that I appreciate that you respect that the agents that you're working with would have those conversations too. I remember that there was a time where somebody was out there and sort of more acted like a financial advisor and planner and all this other stuff, and it just got a little confusing.
There's different people in this transaction for a reason, so I do my thing. I know you guys do your thing well. Attorneys do their thing well. The appraisers do their thing well. And anybody involved, there's a reason there's different people as part of this process. So I keep in my lane, as they say. I know enough to be dangerous in the other lanes, but I really try to stay out of them unless I'm 100% sure.
Yeah, exactly. And that's how I am. I don't interpret a purchase and sales agreement. Do I understand them? Yes, I do. But, definitely talk to an attorney about that. And that's why we always have the best of the best.
Amen to that.
Yeah. So how about some final thoughts for our final seconds here? But before we get to that, how about you give everybody your contact information? So if anybody is interested in, going through the loan process, that they can give you a call.
Okay. I appreciate that, Sharon.
Yeah.
And same to you. I'm sure you do that. It's John Harrington, Embrace Home Loans. Like I said, I'm celebrating my 25th year. Sales manager over there. My office is in Plymouth, but I'm throughout Massachusetts. I'm licensed in Massachusetts.
He will meet you here in Boston Connect if you need to.
I definitely will do that for sure. And and Embrace is actually in Newport, Rhode Island. My phone number is 508-685-4864.
One more time, just so people who might need a pen.
Slow it down. 508-685-4864. It's my cell phone. It's like you. It's always on me. It's always an appendage. So, and I will return your call as soon as possible. Happy to answer any questions out there. And really, as professionals, the two of us here really help you through this process, whether you're selling, buying, or doing both.
Yeah. Absolutely. And we have people doing both all the time. So, and you're basically all Massachusetts. Now, what about Rhode Island? Can you do loans there, or you probably have someone to refer?
I have somebody to refer. I'm not licensed in Rhode Island.
Okay. But the company is there, so
yes,
certainly
correct.
You would have somebody that you could trust.
We lend throughout the states.
Okay.
But just not me. You have to be licensed in every state.
Yep.
And
I'm thinking about working on getting my license for Florida, by the way.
Oh, yeah, that's probably a good idea.
Yeah, I think I'm going to do that.
I see more of that nowadays.
Yeah. And what about the website? Is there a website that everyone can go to?
Sure. Oh, well, I'll give my email address for now.
Okay.
JohnH@embracehomeloans.com. Okay. And then we can just connect from there.
Okay, perfect. So what are some of your final thoughts? Oh, just a couple things, too, is so I do have a new listing coming on the market, so I can't give you the address yet, but it is a 4-bedroom colonial. It is in Pembroke. The price is still to be determined because we are, in between right now, like the end of the month. So my guess is that we're going to be in the 8s on that one. So I know Michelle Fay from my office is actually having an open house today. She is at 51 Orchard Ave in Hanson, so she's having an open house there. Beautiful house, already has offers on that. And you know what? We might not even have some final thoughts. So I'm just going to tell everybody, make sure you get in touch with John Harrington from Embrace Home Loans, 508-685-4864. And John, thank you so much for joining me today.
Thank you for inviting me. This was a lot of fun. I love this stuff.
I'm going to have to have you back for sure.
I hate public speaking when I was younger, but I love it nowadays.
You are so
Thanks
good at it.
joining.
And it was great seeing John. I saw him on Clubhouse the other day, and I said, hey, John, come join me. And he did. So thank you so much. We'll have you on again soon.
All right, thanks.
Thanks. Bye, Tim.
Bye, Sharon. Thanks.
Bye, Tim. Thank you.
WATD FM Marshfield, WBMS Brockton.